right, let's talk about that moment, that really critical, high-stakes moment in trading. The final stretch right before a payout. It's that point where weeks, maybe even months of disciplined work can just completely unravel in a matter of hours. This is the moment where your psychology, not your strategy, is totally in the driver's seat. Wow, this quote it absolutely nails the problem, doesn't it? It's a pattern that, honestly, so many traders recognize in themselves. You do everything right. You stick to the plan like glue. And then, just as the goal is right there, you can almost touch it, some weird impulse just takes over. You start interfering when you know you shouldn't, and poof, all that hard work, it's just gone. So, what is actually happening inside your head? Well, think about it. When you're still pretty far from your target, the main feeling is usually just stress, right? You're just grinding, trying to make it work. But as you get closer, that whole emotional landscape does a complete 180. The stress starts to fade, and it gets replaced by this really, really dangerous cocktail of relief, a little bit of greed, and this overwhelming need to be in control. And that emotional shift, well, it brings us to the real question here, doesn't it? So, what exactly goes wrong? How do these powerful new feelings make us take actions that literally sabotage a strategy that was winning? Okay, so it really just boils down to a few critical errors. Think of them like glitches in your own internal system. First, you get a warning, protecting too early. You start locking in profits way too soon, and you end up cutting off all the potential upside. Then you get another one, pushing too hard. You start taking on totally unnecessary risks just to get there a little bit faster. Or, and this is the worst one, you just start interfering with working parameters. You mess with the very rules that got you this far in the first place. And here's the really tricky part, the super sneaky part. Your brain doesn't flag these actions as emotional meltdowns. Nope. Instead, it starts telling you this very nice, very logical sounding story to justify all this new impulsive behavior. Yeah, and this is where we unmask the whole deception. What you're calling optimization, let's be honest, it's really just greed. It's that little voice wanting a bit more, a bit faster. And what you call protection, that's just your need for control totally taking over the driver's seat. And my favorite, smarter management, that's just raw emotion wearing a business suit. You're just giving your worst impulses a fancy new name. I mean, this question really gets to the core of how absurd this all is. Think about it. If you've already done all the hard work, you've set up a solid framework, maybe you're even using a system, the entire point is to trust that structure. So why on earth would you suddenly abandon the plan and start freelancing with the controls right when it's about to pay off? It makes no sense. This whole thing brings us to a really fascinating idea, something we call the automation paradox. See, a lot of traders, they think that if they just automate their strategy, they can get rid of all these psychological traps. The thinking is the machine will save me from myself. But here's the big reveal. Automation doesn't actually remove the problem. It just changes where you make the mistake. See, in manual trading, you might mess up a single trade. Okay, that's bad. But with an automated system, you mess up by tampering with the entire system, the one that was already working. That temptation to just tweak it a little bit, man, it becomes almost impossible to resist, especially when you're close to a payout. And look, this isn't just some theory we cooked up. We see this in the actual data, especially from funded trading challenges. Just take a look here. The failure rate, it's pretty low when traders are far away from their target. But then, notice that huge spike right in the middle? That's when they're getting near the payout. The failure rate just skyrockets. People stop following the plan precisely when it matters the most. It's crazy. Okay, so if that's the problem, what's the solution? Well, it's probably not what you're expecting. It's not some fancy, clever new tactic. The real discipline that's required at this stage is, honestly, it's boring. It's all about resisting that incredibly powerful urge to just do something. And this all builds into something we can call the payout protocol. And trust me, it's incredibly simple. Step 1, stay calm. Just breathe. Step 2, do less, not more. Step 3, this is not the time to get clever. And step 4, probably the most important rule of all. If the system is working, for the love of everything, don't touch it. Look, this really requires a fundamental shift in how you think about your role here. Your job in this final phase isn't to feel smart. It's not to feel like you're in control. Your one and only job is to not ruin the process that was already working. You need to be the guardian of the system, not the one constantly trying to break it. And that leaves us with the ultimate takeaway here. As you get closer and closer to that finish line, the biggest risk isn't some sudden market crash or a crazy volatile swing. No, the single greatest danger is the person staring back at you from the screen. This is the moment when you realize the final boss is you. And winning that internal battle, well, that's the difference between getting a payout and having to start all over again.